Welcome to the Forged in Fire podcast. Meet your host, Nate Farmer Eden, co-founder and CEO of Eden Capital, dedicated to achieving financial independence for his community, and Cole Farrell, founder and CEO of Vulcan Capital, a real estate expert with a passion for empowering others through education. Stay tuned for another episode right here on Forged in Fire.
Welcome back, everybody, to another exciting episode of Forged in Fire. I'm your co-host, Nate Farmer Eden. I'm going to bring on Cole. Cole, what's going on, brother?
Nate, what's going on, man? How you doing today?
Bro, it feels interesting being back in the studio after such a break, but I'm doing good.
We were blessed. We had a little time off, enjoyed Christmas, and we had, closing at recently before that. So we took a little breather, and 2025 is here, back to the fire. So how you feeling about this year? You amped up or?
Bro, I'm on fire. No pun intended for Forged in Fire, man. I'm extremely ecstatic about all the cool things that we've got going on. It's going to be a really good year. We set our goals. That episode will be coming out very soon for those that are out there. There's also an episode previous to this. Make sure that you guys check it out. We talked about KPIs and metrics to be able to help you guys out with setting goals. So, man, I'm looking forward to this year. How about you?
I'm amped up as well. We got everything in the works. I feel like we have every single, what's that saying, iron in the fire, something like that. Everything's moving. And thank God everything is progressing, which is exciting. I was sick on New Year's and I heard that's good luck. So I'm going to keep telling myself that. So I think we're off to a good start. So who knows?
Who told you that? I have never heard, all of my 36 years of life, I've never heard that, not once.
It's true. If you have a bad New Year's and you're sick, then you're destined to have a great year to make up for it. It has to balance. Life balances.
Oh, kind of like only up from here kind of thing.
Yeah, it's probably some weird dude in Starbucks when I worked there told me that, and I just listened to it. But who knows? I digress. All right, let's get through some housekeeping items, right? All right, first, please leave us a rating and review. We want to help, we want to keep growing and helping other people get educated. Second, of course, subscribe so you don't miss an episode. Third, if you're not in our community yet, specifically our Facebook group, if you go to Facebook and you search Forge REI Community, we have just about 500 plus members in there at the moment and growing rapidly. And we just like talking shop. So jump in there, free, obviously, and we'd like to see you there. And second, check out our website as well if you have a second, forgereiacademy.com, and there's tons of free stuff, great info, etc. on there. Lastly, sit back, relax, and enjoy the ride.
Dude, Forged in Fire is crazy. All right, man. Today, we have the honor, pleasure, and privilege to talk to a third of the members of DEP. This is going to be a 3-part series, and Frank is first up coming to bat. So, Frank, he actually resides in Hawaii. Amazing. Runs a syndication firm. This dude is crazy. Let's hear his story, man. Let's bring him on stage. Frank, how you doing, brother?
I'm doing great, guys. Thank you so much for having me. You guys are great dudes, and I'm happy to talk shop.
Dude, the pleasure is ours, man. So please tell us a little bit about yourself, man. What got you here? What brought you here?
Yeah, so far journey. I mean, if you asked me maybe 5 years ago if I'd be, in real estate, I'd probably tell you you're crazy. I grew up on Maui and came from humble beginnings. Blessed to have parents that, made sure that our needs are met. But as far as forward thinking and really creative thinking in life, it wasn't really there. So I kind of started my entrepreneurial journey early in high school, but didn't really know that it was called that, right? So I used to sell, I don't know if you guys know what spam musubis are. It's like rice, spam, and it's wrapped in nori. And so that's a really good like snack over here in Hawaii. And I used to sell it, and I use those funds to buy my fishing gear. So that's where my kind of entrepreneurial journey started, and then it died off after I graduated because it wasn't really a normal thing to do, right? Like I wasn't taught that you go and start a business. You just graduate and you go to work or you go to college. So kind of graduate from high school and then really didn't want to go to college. So I just went on and started working. And then I got into an excavation firm, in 2016, and that's kind of where I got my expertise, and I really honed in on that career, and I went all in. And I wanted to be a blade operator, and that's basically the machine that finishes off the dirt side of the construction site, and I would say that's kind of the top job. You kind of want to be in that seat. And everything changed when I moved to Dallas. And that's where everything kind of shifted. I was taken out of my comfort zone, which was being here in Hawaii, and I moved to Texas with my fiance, or my wife, girlfriend at the time. And that's where everything changed. I was exposed to so much growth up there. And I worked for an excavation company, but on the concrete side. So I was a concrete batch plant operator, and we were basically paving everywhere that DFW was growing. So we did a lot of jobs up north, between DFW and Oklahoma, and that's how that seeing all of that was like, man, there's something going on that I need to teach myself about. So that's where I kind of got pulled into real estate. So yeah, I don't know if you guys want to stop there and we can, pick apart all of that.
Oh, there's so much to go into. So I want you to tell me the final bit though of you got into real estate at that point, right? Your eyes were open, you're in Dallas, you're seeing all this stuff, and take me to where you are now. So what did you do once you kind of had your eyes open, and then where are you at now?
Yeah, so once I got my eyes opened, I started researching a bunch of stuff, and found that single family was an asset class that didn't want to be in real estate. I wanted things bigger, right? And it more so came from the fact that I wanted to bring on family members, right? Because if you bring on a family member in a single family house, it's too small. I only can bring on one person, and I got to find another deal. Versus an apartment building, there's enough of the equity piece where I can bring in multiple people. So that kind of got my head turning. So I was like, I'm not gonna do single family. I'm gonna go straight in and jump in the deep end. And then I found a syndicator who lived on Maui at the time. He had a mentorship program. I got into his mentorship program, and that's kind of where I started learning about syndication, like fully. And then now we're at, you know grateful that we've closed two deals, me and my two other partners. We're co-GPs in those deals, and we're grateful for the teams that brought us on and gave us the opportunity, like you guys. So we're very excited, about the future. Changing up the business plan a little, but still in the same realm. So we're excited, just like you guys mentioned, before you guys brought me on. So we're excited about this year.
Dude, I love it, man. I appreciate the fact that you're willing to share, and take us all the way back and what it looked like coming from Hawaii, then going to Dallas and getting exposed to all these different kind of culture shocks, if you will, and then the
Mhm.
DWF, DFW, whatever the acronym is, and then moving, and then now what I want to do is I want to dive in just a little bit, man, because we went in so many different places, miles literally. So what were
Mhm.
some of the challenges, some of the hardships, some of the adversities that you had to overcome in all facets? And you can take it from whatever direction you like.
Dude, honestly, it was imposter syndrome, right? Like, how does a local boy from Maui who came from nothing, how can I be in an industry, a billion dollar industry? How can I even compete? So I would say that was the first hurdle, getting over that I can do that. And it's just like getting over that simple mentality, like, hey, I can, right? It's very hard to even say that in your brain and go about, getting on calls, talking with brokers, talking with other professionals in the industry. So I would say that was the other hardest part. But after that, looking back, I jumped into the deep end, like I mentioned. I wish I didn't, right? There's so many big firms in Dallas. I could have just gone on as an intern or maybe worked as an analyst for these big firms learn on their dimes and learn everything, kind of the right way, and that's what I wish I had did. But hindsight's 2020, and now is just continuing the move, but still, learning the right things.
I love that. It's interesting because I think a lot of us and a lot of people listening to this are in that camp per se that they bootstrap it and it's kind of okay, there's my goal and I'm gonna do whatever it takes. And I
Hmm.
think there's a lot of value in that, and I respect that a lot. But I definitely agree with your point to a degree of like there's always another route where you can kind of learn from the big dogs and whether get paid for it or not, but kind of learn. And I think it might be a mixture of marrying the two that has like the best opportunity. How do you work with the
Hmm.
best and maybe get a little pay for it, but also kind of run your own shop and do your thing at the same time.
Yeah.
So I want to dial back a little bit though of you talked about why multifamily, but like as you got into the syndication stuff, as you started seeing the big firms and things like that, like what drew you to that? Like, why pick this? Why not just go buy a duplex? Why not? You say you didn't like singles. We don't either, but why not go buy four or five, whatever? You jumped into the big stuff.
Man, I honestly wanted to push myself. And for me, I think I got this from my mom. I'm very like, you got to keep going. You got to keep going. You're wasting time kind of thing. And I didn't want to spend years and years buying small stuff. I just wanted to get into the bigger stuff and learn in that, because I was also learning that even from those smaller multifamilies, like maybe anywhere from 5 to 20 or 30, it's a different animal when you move into the bigger stuff. And it is translatable, but it's different in a sense. And I just wanted to get into the bigger stuff. I think on top of that mentorship program I was in, they really push for you to think bigger. So that kind of put me there. But I'm grateful I got into the bigger stuff. It's kind of where I feel like I want to be. I've never had so much you know clarity in what I really want to do in life, until I got looking at the bigger apartment, like institutional grade asset classes. So yeah.
Dude,
Yeah.
I love it. And full transparency, we are fully off script. None of these questions have come from anything that we had. I love these
Dude,
kind of
yeah.
interviews. This is awesome. So,
Heck yeah.
question for you. I've been watching your social media. I've been looking at all of your posts, man. I've been trying to engage with you. You're crushing it. You guys also have a Facebook group and all that. But at what point did you realize that going down the multifamily syndication style of underwriting was what you really wanted to focus on? Because you and I have had conversations about underwriting. You too, just like Cole, are a beast at the underwriting side. So at
Mhm.
what point, maybe from growing up, from your childhood, or maybe just after you went to Dallas, you're like, hey, I want to take more of the analytical approach. I love numbers and spreadsheets. Because I would love to know how you got there, because
Yeah.
I've not yet gotten there.
Dude, it's funny you asked that, because there was no background in analytical stuff, Like, I came from construction. We don't we don't do numbers. We just do shovels. So, um so the reason why I got into underwriting was because we were taught, like, hey, there's roles on the team. And I chose underwriting because, one, I was a massive introvert and I did not want to talk to anyone. And then underwriting aligned with my work schedule. I was working at the concrete batch plant. We were working 65 hours a week. And I was like, I can't call brokers at 8 o'clock at night and on Saturdays or on Sundays, because that was my only day off. So I was like, I'm just going to take underwriting. So yeah, that's how I got into it. But I'm really glad and fortunate that I got into underwriting, because man, it really helps with pitching deals to investors. You know the numbers inside and out, most questions, so that's what I tell everyone, if they're breaking into the industry, they kind of don't know, they don't want to do underwriting just because they think they're not analytical. That's great and all, but you still should have a firm foundation of how the numbers are generated in a deal. Because I tell you what, man, the conversations with investors are that much easier. So yeah, it's funny you asked that. No analytical background, nothing like that. I honestly never went to college after high school. I went straight into the workforce. So it's funny, people think that you have to have a degree, to get into this industry. You don't, man. You just have to work hard and sacrifice a shit ton. So yeah.
That's awesome. And it's funny, like one of the things I always like to touch on with underwriting that you're bringing it up is it doesn't, like you said, you don't have to be an expert to do it. What makes somebody an expert at underwriting is the reps. It's the repetition,
Mhm.
it's the practice, and it's the
Yeah.
understanding how the model works and why the model's built that way. And it doesn't take a degree, it doesn't take a genius to figure it out. You just need to know
Mhm.
the fundamentals basically of underwriting and know what levers
Yeah.
to pull. And at the end of the
Yeah.
day, it happens to be pretty quick. And what I like about underwriting is once you run 50 deals, 100 deals, 1,000 deals, you just know, like you just start getting this sixth sense. The deal's going to work. I can do this. I can do that,
Mhm.
and it does. So it's pretty
Mhm.
cool to see that, and I just like that you mentioned that.
Yeah.
So like dial back to one of the other step ones or step twos. You talked about syndication, and most people that listen to this are familiar with real estate. But give us like a super quick overview of what that means, and then second point of how do you prefer to finance deals aside from like the raise itself? And what do you kind of look for in terms of financing these assets?
Hmm. So syndication is basically pooling a bunch of resources together to accomplish a goal, right? That can be anything, but in multifamily sense, you're bringing a bunch of resources, as in talent, right? A group that knows how to operate the deal, a group that knows how to raise the equity, and then the investors are the last piece, which is their job is to just bring in the equity of the deal. So that's basically what a syndication is from a high level. How we like to finance deals? Um, I mean, basically any kind of sort of financing, agency debt. Most of the deals we've gotten into are financed with that regular, agency or yeah, most agency debt, but we don't bring on anything that's like pref equity. So it's mostly just, the lender, which is a senior debt, and then the common equity finishes everything out. If we see pref equity, most times we won't invest in that deal just because they have an upper hand than the common equity. So
Dive into
yeah,
that real quick. What is pref equity for somebody that doesn't know, and why do you feel that way? Like you said, upper hand, just give some more like context.
yeah. So pref equity is basically they have they have seniority, or um, they're paid first basically. So they after all the cash flows they get paid first, and then the common equity gets paid. And what that means in another sense is if the deal goes south, they're paid first, and then the common equity is paid second after them, and that's after the lender is paid back, and then the pref equity is paid back. So that's why I don't like that. Um, I want to be as depending on how you look at the capital stack, I want to be as close to the senior debt as possible, just in case something happens. But yeah, that pref equity is kind of like a new product in the market, and that's because all of the all of what unfolded in the with the interest rates going up, groups brought on pref equity to either be a cash influx into the deal or help them to do kind of like a refinance. So that product is kind of going out of the norm. A lot of groups aren't doing pref equity, so that's good. But every time I'm on a phone with an operator, I'm always asking like, hey, what's your capital stack look like? Are you guys do you guys have that in most of your deals? So yeah.
Awesome.
I love that. So on the same wavelength, talking pref equity, talking capital stack. And I was watching, I believe it was like yesterday or day before, you were talking about somebody was pitching a deal to you, and you made the awesome remark about establishing that relationship first before you spend 45 minutes to an hour telling me all the numbers. Who the heck are you? Let's start there. But that brought up a great point, and I'm realizing it seems as though, especially if somebody's pitching a deal, you're going to be the first point of contact from the squad. And what do you look for? So before it even you bring it to the rest of the team, somebody presents you a deal, you've already established that relationship. What are the metrics? What does the buy box look like that DEP loves?
So we're looking at anything in the Sun Belt and Midwest markets. We want to purchase anything 50 to 400 units. We think that being in the at least 100 plus units works better for us. And then 1980s is the oldest we'll look at. And then anything above that is golden for us. And things I look at, when I'm networking with operators, I'm always asking like, hey, how many deals have you gone full cycle? How many, what does your team look like? Are you guys vertically integrated? Are you guys, do you guys have property management in-house, construction management? And just knowing all of that really just helps us set the foundation of, okay, is this group who we want to partner with? And then who are they? Like, because we invested with you guys because you guys are great guys and you guys had a relationship with Willie, right? Like, dude, I was amazed on that first call we had with you guys. Like, I don't know, I felt like I knew you guys for a long time. So those are the things I like to look at, and Willie already had that relationship, so it's easier to just go into it. If I have that sense from a group on the first call, then it just makes it easier, but there's still time to, nurture the relationship and really learn. So mostly when I'm talking with operators, then I'll plan to, fly out to the market and, spend time with them on their properties. But, I'm not going during the winter, man. It's too damn cold to go in the winter. So I'm waiting till April to fly out. So yeah. I know Texas was, I think, or not Texas, but Dallas was snowing, I think, last week. So I'm like, yep, I'm not going up to Texas anytime soon. Nor am I going up to North Carolina. I'm pretty sure it's cold. Look, you guys are in sweaters right now.
Look, Texas is probably sunbathing right now. North Carolina just got the first snow. They think it's a blizzard. It's 1 inch on the ground. And Nate, what's it like? -4 where you're at?
Actually, let's go ahead and pull this up. Today was a warmer day. Today we're at 8. It's fine.
Oh my gosh, 8
I
degrees.
thought I was bad. We're at 30.
It's a high of 8. It's really 2 degrees, but I want to make myself sound really cool here in Wisconsin. We're at 8.
Dude, I'm freezing ass at 60 degrees up here.
Oh my gosh.
I don't even want to hear it.
Jealous. But I love that. So, and I like how you dialed in on the team because that's so important. You want to invest with people that you trust. You want to invest with people you like, that you groove with. And of course, really appreciate your kind words. It's been great working with you guys as well. It's been very fun, very easy. And so kind of related to that, but specifically not the team in this case, unless you want to touch on it, but what are other things that you pay attention to as far as risk goes? Like, what are certain things that you have your eye on or have the hand on that are just, no-goes or that you're watching for?
Yeah, so just like on my initial conversation with the operator, it's that capital stack, right? Because that's the biggest risk you put on your property is the debt, right? So I'm always, one of the things that I always look for, and then maybe I can talk about like a deal being sent to us. For me, looking at the deal, I want to see that they're not leveraged too high, right? So I want to see deals that are at least 70 to 65% leveraged, and there's no pref equity in there. Another thing I want to see is they have a footprint in the market and they have a few properties in the market, which means that they're familiar with it. They have at least a sense of what goes on. Man, other things I like to see is their exit cap rate. Oh man, it's crazy that people don't, they probably know that, but man, your exit cap rate is such a big lever, and that, just from like 50 basis points can really change your returns. I recently got a deal sent to me that, man, they had um, a lower cap rate than what they're buying it at, which is crazy because how can you tell me that cap rates are gonna compress in the future, right? You don't really know. So if I don't know the market cap rate, then I want to see at least an expansion from your going in cap rate and your exit, right? At least 50 basis point, at least. And I could see why they projected that they would exit at a 4. I think it was a 4.2. Yes, 4.2, but their debt was at a 4.2. No, their exit was at a 4.7. Their debt that they're getting the property at was a 4.2. So I guess I could see it in the 4 range, but then I still don't want to see that, on a deal that I'm in. So that's something like that. And then another thing is like your yield on cost, like how much equity or how much does your total project cost, when you're stabilized and relative to your stabilized NOI. Like I want to see a gap in that. For this particular deal, it was the same. Their going in cap rate was the same as their stabilized yield on cost, which means that they brought in way too much equity into the deal, and their NOI wasn't, you know, I guess big enough, right? For that to make sense. So, looking after seeing that metric, I looked at their equity and they're bringing in way too much equity to the deal, so that's some of the risk things I look at. And dude, that's just high level. I didn't even dive into the numbers because I don't need to. I already looked at it from a high level. So those are the things I look at.
For those that are listening that might not know, can you explain to us a little bit more about what BIPs are or standard basis points?
Yeah, so bips are basis points. So 50 is point 0.5, 100 is 1%. So, if you have a 4% interest, and 5% interest is 100 bips higher than a 4% interest. So, yeah, that's
Beautiful.
that's just an easier way of saying it.
I love it. I'm in. I appreciate that. So this one is completely subjective. And a year from now, we're going to go back and actually rewatch this recording and see how close you are. So
Okay.
tell us about your future projections. What do you think is going to happen within the market? That's cool. Tell me a little bit about that. But also talk about what
Mhm.
you guys got going on for DEP. What does this year have for 2025? What do you guys want to crush? Future projections on all fronts.
Yeah, yeah. Dude, it's so crazy because there's so many things that are gonna happen that really influence things differently. So, for instance, interest rates have been decreasing, but the 10-year treasury has been increasing dramatically. And people normally buy where interest rates are, right? So, cap rates are going to be supposedly expanding because the 10-year treasury is continuously expanding. And the 10-year treasury is basically how loans in the commercial real estate, that's what they're tracked by. They follow that metric, the 10-year treasury. So it's funny, 10-year treasury is going up. Interest rates are going up for the commercial side. Cap rates are supposedly going to be expanding because of that. But then on the other side of the realm, you have supply and demand issues. In DFW, their demand, basically their absorption outpaced, the deliveries, or the supply. So what that means is there's so much demand chasing the product, that which causes, cap rates to compress because rents start going up. So it's like you have the interest rate on one side expanding cap rates, but then you have the other side of supply and demand compressing cap rates. So I don't really know, like what that's gonna unfold, right? No one has a crystal ball, but I all I know is now is the time to get into, um multifamily, at least only because I focus on multifamily. And where we came to the point in 2020, 2021, peak of the market, headed down because of interest rates. Now we're at this trough. And in the coming years, because of this supply and demand issue, now we're on the come up. And right now is the time to buy. We're a little too late because you should have bought at the trough. But now we're on the come up, and now is a time where you can drastically change your net worth because of you buying at this come up. So I'm excited about the future. That's why we, now to go into what DEP is focused on this year, we're just rapidly trying to get in front of investors because, we alongside, putting these opportunities in front of our investors, we want everyone to succeed and we want to succeed as well. And this is the time to buy. So this year, our focus is to buy at least 4 deals, come in as LP equity. We did the co-GP route, with our first deal and with you folks. And now we kind of want to take a step back from operations and like just solely focus on raising money. Because we found that we enjoyed that. We did that all last year and learned our lessons. And now we just want to do that moving forward and capitalize on this market that we're about to get into. So that's our focus this year, raising money.
Awesome. I absolutely love that. And it's cool to see where you guys are headed and see you kind of like reflect on what you did and didn't like. Because I think that's a huge thing, especially this time of the year. So with that said, Nate, you think it's time? You think he's ready?
We definitely did not prep him for this, but I believe he's ready.
Nobody's caught on fire. Nobody's died yet.
Okay. Main thing.
At least not on the recordings that we put out to the public.
Yeah, we cut that piece out. All right, here's how it goes. We're getting into the fire round, the forge, whatever you want to call it. And we ask these questions to every guest. And you can, excuse me, I'm still losing my voice. You can answer succinctly, you can answer at depth, whatever you want to do. But we're going to do our best to not talk or respond to you. And we're going to fail, but we're going to try.
Okay.
All right, here we go. What separates top performing entrepreneurs from the rest of the crowd?
Having a strong mindset really gets you through the hard days. The people who succeed really get through the hard days, and that's why having a strong mindset, I think that's important.
And what is a daily habit that's contributed to your success?
I would say a morning routine. Yep. I wake up, try to wake up early. I work out because that's the first thing. I really believe that, if you're unhealthy, then it really doesn't matter what kind of success you have because you'll just die early. So first thing, morning routine is workout first. And then I get into my work just because I want to make sure I do it every day. If I plan for an afternoon workout, I end up not doing it. So morning routine. Yeah.
Love that. What is a piece of advice that you'd give to yourself if you were starting again?
Focus on your cash flow. Make sure that your cash flow is consistent and sustained before you take on any more ventures, risk, and all of that. You want to make sure that your bases are covered.
What is your favorite business book?
Dang, I gotta do 2-Day CEO. Systems and everything talks about that in there. Yeah.
It's a new one. I'm gonna have to add that to cart. What is your favorite part of owning and/or operating your business?
Connecting with investors. Really love, just hearing everyone's story and giving them an opportunity to change their life, potentially change their life, and just putting it in front of them. Like if they don't take advantage of the opportunity, then that's great. But at least I presented it to them, right? You can lead the horse to the water, but you can't make him drink it. And if I can, lead them to the water at least, then, I've succeeded in my mind.
Final question. This one's going to be good, but here's my challenge for you. Once you answer this question, take it back to the rest of the team because we're going to have part 2 and part 3, and I don't want the same answer on all 3. So my
Okay.
final
Okay.
question is, what is something new that you guys have implemented in your business to help drive your success?
Something that we put in our business. I think this new route that we're going, and it's going to lead to massive success in our business. And that's basically doing kind of like a fun to fun route, creating an SPV that's deal specific, and going into deals as an LP equity. I think that's going to massively change because we're able to negotiate better terms because we're writing bigger checks. And what that does is that puts more money into our investors' pocket. So I think that that's going to drastically change the business for us.
You survived.
Nice, dude. Kind of
That
sweating,
wasn't
but
too bad,
it's
was
fine.
it?
No.
See, you just need to come on the podcast. You don't actually need to work out. It's a workout in itself. No, I love it. So, I mean, just to recap real quick, it's really cool hearing the story from the get-go, right? Like your entrepreneur journey, starting out, doing some sales kind of on the street and like learning the ropes, getting into excavation, hearing about wanting to be the blade operator, and then how you got into construction. And then that move to Dallas was eye-opening, and how that changed your life. And you decided to grow. You started getting into real estate. You did your research. You realized that singles are the worst. No offense.
Mhm.
And then you hired a mentor, somebody that was an expert at what they do, and you started building. And then you bootstrapped it and you went for it. And here you are. You have deals, you're running deals, you're growing, and things are cooking. So it's really cool to hear that. I have two final questions for you. One, any final advice for anybody listening about anything? And two, where can people find you?
Yeah, my advice is you can literally do whatever you want. Like if you just put your mind to it, if you make sure your mindset is correct, and in check, you can literally do whatever you want. You can be the next Grant Cardone, right? If you wanted it really, and you put in your mindset to that. So yeah, I like to share that on every interview or whatever. If they ask me what advice I'd give, it's that, because I really didn't have that growing up. I didn't know you could be whatever you wanted to be. So that's something that's super important to me, and I like to share. To find out, to learn more about us, you can visit us at Diversified Equity. Wait, what is that? Okay, I gotta get this correct. Okay, diversifiedep.com. That's our website. You can hop on our newsletter, and that's how you can kind of stay in contact with us. We do webinars, we do events, virtual events, just because we're spread out so much. And then you can also find me on Instagram and LinkedIn, Frank Tashima. Um, I'm active on both of those platforms. Those are my jams, and I'm gonna stick to that. I don't like to over leverage myself, and too many platforms just gets way too hard. So Instagram and LinkedIn is where you can reach out to me. So yeah, man, happy to help, happy to chat with anyone. I'm always open to chatting and meeting with new people. So yeah.
Frank, my brother, I love it. Amazing interview. Definitely in the top faves. This has been awesome. Your energy, your vibe. I'm excited to get part 2, part 3 rolling as well.
Yeah.
Man, I was laughing to myself because this reminded me of an interview that one of our partners, Joao, was a part of. And they asked him, they're like, what's your socials? And his response was like, I don't know, you got to talk to my VA. Because you know that somebody's working and grinding hard when they have no idea. It just happens and everything's
Yeah.
working. So, dude, you are
Nice,
crushing it.
dude.
It's been an honor. It's been a pleasure. It's been a privilege to have you on. For those that are listening, get home safely. Thank you for tuning in. We're looking forward to having you on for another episode of Forge and Fire. We'll talk to y'all soon. Peace.
Bye, guys.